You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Monday. It is noon Central, 1 p.m. Eastern. It is time to commence our broadcast week here on the Options Insider Radio Network. And I ask you, nay, I dare you, what better way is there to kick it off than with episode 1 of your bi-weekly extravaganza known as the Option Block. My name is Mark Longo from the aforementioned network, as well as, of course, from the ever-exciting theoptionsinsider.com. Of course, keep an eye on that site. Some interesting stuff going on over there. Going to be rolling it out pretty soon. I think you folks are all going to like it. You can maybe see some hints of it there already. Popping out little early surprises out there. Some spring daffodils, if you will. Remind you, of course, if you like what you hear, this show, anything we do here on the network, keep those ratings and reviews coming. It really does help the new folks discover the content in these extremely turbulent times. And, of course, keep those questions and comments coming, too. We do love to hear from all of you guys and gals out there. And we have heard from many of you. You love kicking off the week with our Guess That 80s theme song. We also had a lot of you write in and weigh in, including our producer and even some of the hosts on this show requesting today's theme. Going to mix it up a little bit. Last week, we went kind of to the more obscure, action-y genre. This week, we're mixing it up, getting a little silly. All right, here we go. Can you name that 80s theme song?
Honey, I'm home.
All right, there we go. a silly, fun one. Many of you requested this one, including, I do believe, some of the people on this show today. Let's see if you remember. Let's go around the horn. Let's start with the uncleest of Mikes. Let's go back to him, because why not? He is the champion. He is our reigning, defending winner so far for all of 2020 and so far in the lead for 2021. Despite our attempts to mix it up and get other people in there, he continues to maintain his death grip on the 80s theme song guessing game segment. Uncle Mike of St. Charles Wealth Management. A, welcome back to the program. And B, could you name that TV show from the 80s theme song, sir?
Oh, it's on the tip of my tongue, but for whatever, it's not coming to me right now. I don't have it. I'm sad to say that I'm a defeated man today, but happy to be on the show.
Wow, I thought that was a home run for you.
Yes. Yes.
That bit of excitement, that excited voice you're hearing, listeners, can be none other than the very distant. He sounds like he's on the moon today. Meatball here. We'll see if we can bring him a little closer in the break here. But Mr. Meatball, a.k.a. Mr. Mark Sebastian from OptionPit.com, I'm guessing from those excited screams, I think you were one of the ones who requested this show. Can you name this show, sir?
Well, sadly, the voice of Fran passed away last week. But this is a great show. I believe it's currently on Disney Plus, and if you haven't seen it, it's amazing all the way until the amazingly morbid final show. It's called Dinosaurs, and it is a production of Jim Henson Productions, which is why it's right up in my wheelhouse. And one of the better TGIF shows that I can remember from back in the day. This was just absolutely ahead of its time. And what I will say is, Mike TOSAW, you are not the Michael, not the champ, not the champ.
Yes, the baby. Everyone remembers the baby, not the mom. This one is definitely one of those under-heralded gems of a show. I certainly remember the baby, obviously, of course. I remember the dad watching a TV show called Totally Ineffectual Dad, and the dad was just sitting there. The baby was running around on fire by him. He was just sitting there doing nothing. Yes, that's the kind of gem that it was. If you haven't checked it out, you got Disney Plus. Everybody does these days. It definitely is worth a look as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. And today's show, kind of keeping with that narrative of if you don't like what's going on in the markets, just wait 5 minutes, because chances are you'll see a market shift in the other direction. That's kind of what we got coming into today. Of course, Friday kind of embodied that in many ways as well. Maybe not different direction, but certainly degree. We saw that crazy rally towards the end of the day that drove everything up into the stratosphere, annihilated all the vol out there. Now, of course, we're seeing something a little bit different today. We saw coming into the start of the session, we saw mostly red on the screen. And then coming into showtime, we got S&P actually breaking into the green out there. Looks like NASDAQ still ever so slightly in the red, and the Dow is pretty firmly in the green, about 0.2%. S&P about 0.05%, so not quite roaring to the upside, but compared to where it was a few hours ago, certainly looking a lot nicer. That, of course, means all of our friends in the vol market having a little bit of a change of pace. VIX coming in right before showtime was at about 2060. It's come off even since then down to about a 2030 or so, 20.3. That puts it down about almost 0.75 of a point from where it was this time last show. So we're still in that ballpark, obviously still north of the 20 handle. But again, if you don't like that, just wait 5 minutes because we could be below 20 pretty darn quickly. VVIX was surprisingly low, as you mentioned on our show on Friday on Vol Views. It was shy of the 100 level, which we haven't seen in quite some time. Coming into today's show now, it's back up to about 108.25, which still is down from where it was on our last show, down about almost 2 points from there. So we had that weird blip to the dark side there in VVIX on Friday, which is weird. And again, a level we haven't seen pretty much since the start of the pandemic. VVIX has always been pretty much 120, if not north of it, since the pandemic started. So seeing it get down into the below triple digits range ever so briefly was kind of interesting. Our old friend VXX, aka the product all of you like to fade, getting its fade back on. It was right around the 12 handle as we kicked off the show. That puts it down about almost 2/3 of a point from where it was this time last show. Got a little bit of that reset again, and then right back down again here. And, of course, Vol Q coming into Showtime was at about 25, almost exactly. It puts it down about half a point from where we were this time last show. So net on the vol space, not a huge amount of movement, even though we have seen a lot of velocity in the markets since our show on Thursday. And Mr. Meatball, since you won today, I thought for sure Uncle Mike was going to take this one from you, but you won, so you get the pride of place of going first, sir. So A, any more lingering memories of dinosaurs have at it, and B, more importantly, what is lighting up your tape today, sir?
I remember the boss, and I thought he was funny. The TV show references were always hilarious. But really more what I'm watching is, Viacom and Discovery, the crazy action from Friday. There was a giant margin call on both of these, causing them to basically get clipped 50%. And at the same time, we had the market just going off to the races higher. It was a really, really weird day. I had not seen it. I was trying to think of, Mark, when was the last time that we saw a close where, in the last hour of the day, and this was Friday, in the last hour of the day, we pick up like 40 points in the S&P, like a 1% just out of nowhere rally. The NASDAQ was off. The Dow was off. The VIX got smoked.
It was nuts. It was nuts. It was really weird.
I was like, what in the world is going on? And I don't know if it was related to what happened in Viacom and Discovery, but those have gotten absolutely knee clipped. I'm in kneecap. I've been in there this morning looking for opportunities to sell puts. And then, I'm watching, Johnson & Johnson is having a good day. Nike has turned it around. We're seeing the Dow lead again today. While, again, the NASDAQ is kind of the laggard. And, the Russell 2000 seems to at least have found some footing after just a nasty period that ended at kind of Thursday morning. So things have been all over the place. And, coming off the weekend, we got a really strong VIX. I don't know if that's going to last, especially if we start getting green. I think that kind of rip-roaring rally from Friday, and then this Viacom and Discovery Network thing is throwing VIX for a little bit of loop. Anytime you have, major margin calls. I mean, Credit Suisse and Nomura both said it's going to wipe out like a quarter's worth of earnings. I mean, it is what happened on those margin calls is just absolutely insane. Makes you wonder who is going 5-1 long on a post-merger Viacom spread. And Discovery Networks barely makes any money. Why are you levered up on those two? I don't quite know the logic.
Those aren't the names that scream out at you. You're right, for super high leverage, high margin trading out there. Those are not the names that leap to mind right away.
No, and what's interesting is that Viacom had just done a secondary offering, and I heard this from Garrett Baldwin this morning. That Viacom had just done a secondary offering at $85, and it popped to 100, and now it's sitting here at like 48 or 49 or something like that. I mean, they should just go in and buy some of their stock back and say, "Hey, look at us trading," because that was an impressive sale, and they've got an opportunity to cover some capital. This is absolutely a dislocation in the market, and the reason why I'm selling puts is because I 100% want to take advantage and get in at these levels that I wasn't sure we were going to see again for a while. And a crazy weird margin call like this is a great opportunity to try and jump in at these with the option implied volatility blowing up. And that's kind of what I've been all over today.
Yeah, I'm looking at the names that were impacted the most by this liquidation, in case you're you weren't watching this, listeners, there was a weird end to the session on Friday. I was kind of scratching my head, too, is what the hell is lifting all this so quickly? And, of course, a lot of this was driven by this $20 billion with the B, $20 billion. That's going to leave a margin call at Archegos Capital, unwinding some positions. The big positions they had were Baidu, Tencent Music, one we talk about a lot here, VIP Shop, maybe VIP Shop, spelled weird, though, Holdings here. And then, of course, Farfetch, one of the ones that's been on our radar quite a bit of late out here, as well as IQIYI. And then Viacom, as the Meatball just mentioned. Again, this is in the Discovery, these are the strangest. And the number one holding was GSX Tech EDU. So, yeah, it's interesting names across the board. Farfetch, though, has been on our radar quite a bit of late. Interesting stuff. You know who loves himself some Farfetch, a.k.a. luxury fashion online retailer. None other than Uncle Mike, probably the most fashionable guy you're going to meet out there in the environs of St. Charles. Uncle Mike, when you're not shopping at the dollar store, you're hitting up Farfetch. What is lighting up your tape out there as the day is turning distinctly Uncle Mike-ish?
Well, I mean, I got to have something to make up for the fact that I no longer hold the belt in the 80s theme game. But Seabass, I'm coming for you next week.
I thought I handed you a layup there, sir. I thought for sure that was yours in the bag. I'm not all rooting against you. I'm trying to get you some wins, Uncle Mike.
No, I know you are. But, hey, when you're the champ, everyone's going after you. And Seabass got me today. But I'll be back on my A game next week. But I actually never really watched that show in the 80s. That was one of the shows I guess I never really did watch. So nonetheless, I yield to the champ. But in terms of today, of it being an Uncle Mike,
it's on Disney Plus. I would say give it a couple episodes. You're going to like it, Mike. I think it's up your alley.
I'll take a look. That's one of the ones that I missed during the 80s. And as you guys have seen so far, there weren't many that I did miss. That's for sure. But in terms of the day of what's going on in the marketplace, S&P roughly flat on the day right now, but we were down quite a bit, or close to 1% at one point. I think it was roughly 32 points down, if I'm looking at my chart correctly, with where we're at on it. And markets rallied from that. So in terms of what we have going on, I think the day would be even more bullish if we would have more bullish sectors. So in other words, we're looking at the financials. Financials are down almost 1% on the day, and looking at XLF. We also have sell-off in energy down roughly 1.5%. And so we have kind of a mixed day in that healthcare and utilities are up, as well as consumer staples. So we have that. XLK, and looking at XLK, that's down slightly on the day, but not a lot. So this really could turn into a bigger rally later in the day, or could turn around and go downward. You never know. So it's interesting in that we have some things up and some things down, and it's kind of creating not much movement in the overall market. In terms of the Treasury yields, yields are up again slightly on the day. So I was able to sell another covered call on that. So always excited when that happens. But with that, what actually happened was I actually got called away last week, and the underlying opened down below where I got called away at this morning. So that's always exciting when that happens. And so now in the age with which we don't have stock commissions anymore, I actually bought the underlying and sold a call against it today instead of just selling a put to get back into it. I felt the risk reward, the bid ask, and everything was better off by doing that. So that's how I did it today. And I've actually, and this is the first time that I've been able to fully take advantage of these zero commission stocks. Not that it was a big deal anyway, but I've been able to fully take advantage of the zero commission stocks and do that and make that comparison. So that's what's on my radar right now in terms of what I'm looking at this week. We're making a run at that 4,000. If we can get the ginormous rally like we had in an hour at the end of the day on Friday, another 24 points in the SPX getting to 4,000 is not out of the question in the near future. So just watching to see if we can touch that 4,000 mark. And then Jesse Livermore in his book would oftentimes say that whenever a stock would get to a big number, oftentimes it does rally after that big number. Now, whether that holds true or not, I have no scientific evidence on that besides the fact that Jesse Livermore said it 100 years ago. But it will be exciting to watch once we actually hit 4,000, if indeed we do.
And what was Uncle Mike, what was your reaction to that final few minutes of the session on Friday when things turned decidedly green, sir? I could imagine you were maybe in a personal fast market.
Well, yes and no, because what I did was I already put on my weekend hedges. I had everything in. The prices were good enough for me, like probably around like 1 o'clock to get what I wanted in for the weekend and for everything that I was doing. So I was just kind of going about my day doing some other things because I didn't have anything else to do on the day. I'm like, oh, okay, that's nice. Oh, that's nice. Oh, that's nice. And so I kept looking at the market a lot more than I had intended to that last hour of the day. So all we need is to do that every hour, and this market will be very beneficial for the bulls.
Yeah, every hour, one of those would certainly be interesting. Let's see what's interesting out there in the broad market today, what you folks are trading. VIX doing decent paper, but not exactly blowing the doors off. A little bit shy of 250,000 contracts right now. The ADV also a little bit shy of 600K, about 582,000 contracts out there. Of course, that's well shy of where it was, north of 700K a few weeks back. SPY at about 3.25 million contracts right now. So SPY looking pretty robust from an overall volume perspective. The ADV just a tick shy of 5 million, 4.8 million out there. So SPY's looking pretty hefty out there of late. Yes, also doing some paper. 778,000 contracts on the tape. The ADV about almost 1.25 million out there. So that ADV has ticked up a little bit. So the S looking a little bit more robust out there these days as well. The Qs, the Qs have been moving of late. So today is actually a comparatively modest day for the Qs. Only 610,000 contracts on the tape. The ADV is a gobsmacking 1.64 million contracts. The Qs have been moving. So it takes a lot to move that needle out there today. Not quite doing it yet. The IWM also looking pretty active. Small cap land out there at about 452,000 contracts. The ADV out there also pretty aggressive, 722,000. So small caps once again getting a lot of fascination out there from the folks. Let's see what else you're fascinated from a single name perspective out there today, listeners. Top 10 most actives cost you 197,000 to break into the top 10. So that's all right. It's not even north of 200K. We've seen 250,000, if not more, on that level sometimes on some very active days. So not quite there yet, but 197,000 to get you to Baidu. We were just talking about them. They're part of that great unwind that went up there on Friday. Obviously still feeling some impacts of that today, and it's driving some volume. Number 9, Facebook. 238,000 contracts. Facebook's been lighting up the tape out there a lot of late as all this endless debate going on in D.C. about what the heck's going to be the future of these online platforms. Number 8, Wells Fargo. I haven't seen them in the top 10 in a while. Good for 241,000. They're actually tied with our friends across the street there. Just a little bit more at number 7. Also 241,000 for Boeing. So Boeing back in the top 10 out there as well. Number 6, it's NEO. They're pretty much there every day now. They're good for 255,000 contracts right now, so just a tick north of 250,000. Number 5, it's Palantir. Starting to see some old favorites making their presence known out there today. 258,000 contracts for Palantir. Number 4, Rocket Mortgage, Rocket Companies, back in the top 10. Haven't seen them in a little while. They had that brief dalliance with some of that meme action out there. Then they kind of fell off the radar a little bit, but back in there today for number 4, good for 289,000 contracts. Number 3, what Meatball was just talking about, Viacom, 438,000. Let's see where our friends Viacom are right now. Listen, this is obviously not a name we see in our top 10 all too often out there. Viacom's at about 45.5, off about 2 3/4 and nearly 6% again today. So again, feeling the impacts of all this unwinding. Again, levered positions in these names. Interesting. Number 2 and number 1, you kind of know what they are by now, listeners, who've been listening to the show for a while. Tesla, number 2, with a comparatively light 551,000. That means the big dog is once again number 1. Apple, 712,000 contracts. That's also comparatively light. You know anything about Apple, this time of the show, they're usually good for about 1 million plus contracts. So kind of a light day at the top end of the top 10, but interesting names percolating there throughout. Let's see if we got some interesting names on the docket for you this week from an earnings volatility perspective, listeners. Remember, you can find all these for yourselves anytime you want, anytime, day or night. We don't judge. You want to go check it 2 a.m.? Have at it. You can find all the earnings move results, and earnings season reports, all there completely for free from our friends over there at ORATS. Click on the optionsinsider.com. Options, news, and articles tab. You should be off to the races. All right, here we go. Let's see. We've got this week BlackBerry. BlackBerry's still on the docket. And CHWY and Lululemon, of course, they have the sheer yoga pants infamy. And then Wednesday, one of my favorite names in the space, the Walgreens Boots Alliance. They're allying together to get you better health. Maybe that's their tagline. If not, they could feel free to borrow that. Micron as well, getting a little old school there. And Dave & Buster's Thursday, CarMax. Let's see what we've got on the earnings move reports. Let's see. We've got CHWY here. They're popping off after the bell on the 30th. So tomorrow, they were, as of the time of this report, their stock was trading at, I should say, $35.87. They were, $79 for CHWY. And they were pricing in $7.75. Get this. In the past, listeners, they moved $4.63. So CHWY deciding to be the lone name bucking the trend out there, pricing in more juice. Interesting. Of course, CHWY, at least the name itself, got invoked in that early days of GameStop back in January when they brought on one of the former CHWY execs to help revitalize GameStop. Maybe that's translating to a little additional vol out here. I'm not sure what's driving CHWY, but either way, they're pricing in a lot of juice, which, if past is prologue, not going to work out too well. Lulu, let's see if it's the same deal. Lulu was at a pretty lofty $307.31 as of this report. They're pricing in almost exactly $20. And in the past, they've moved $26.55. So someone got the memo out there in Lululemon. Let's go to the Walgreens Boots Alliance. Let's see, $51.78 as of this report. They were pricing in $243. In the past, they moved $288. All right, they got the memo out there. Let's go to Micron, old school Micron. $83 even as of this report. They were pricing in $543. In the past, they moved $527. A little bit extra juice, not a ton. Maybe be forgiven for that. Let's go on out here to the season right now. Like we said, the season looking pretty nasty for the vol buyers out here, listeners. As of right now, it's 77%. So if you bought pretty much a basket of all the earnings this season, you got back 77 cents on the dollar. And some of these weeks, it was pretty apocalyptic. Week 1, 56%, so your money got cut in half. This past week, 52%, so your money got cut in half again. The best you did was week 3 and week 4, 95% week 3 and 99% week 4. Those are the two closest we've come to really breaking even in a long time out here. And maybe there was one week that was north of 100% here or there throughout the madness of 2020, but pretty much it's been all red all the time, listeners. So fascinating stuff. I thought maybe this was the season where the worm was going to turn, but alas, that is not the case. We shall have to continue to watch the reports, and maybe next season will be the moment we've all been waiting for. But I know you're waiting for right now, listeners. It's the Odd Block, so let's get to it.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's see what the Eye of Sauron has fixed its gaze upon today. First, we go out to the comparatively tranquil shores of PG&E. This is, of course, a utility out there trading right now, $11.58, off about 4% or nearly 50 cents today. And ticker symbol PCG. Yeah, this is not a name we talk about a lot here on the Odd Block because, like I said, it's a utility. They're usually pretty sleepy. So let's see what is lighting it up out here today, listeners. But before we even do that, let's get to the old tail of the tape, if you will. See what this name has been up to over the course of the past year. And yeah, a year ago, they were trading right around $10, a little bit shy of it, actually. And $9.67. So right in the immediate post-blush. So this is, of course, a year ago was the moment the market really started to turn. We started to have that V-shaped recovery. So some of these names starting to rebound off their lows. In the case of PG&E, they actually had more low to come. They were about $9.70 today, and about a week later, they're trading $7.93. They got down to $7.85. So their low came a little bit later. It came in early April, which is interesting. Then it just turned right around and rebounded. By April 9th, it was trading $12. So it rallied over $4 in the span of less than a week. So interesting turnaround here for PG&E. And they kind of vacillated in that $12 range, got down to $10 again, then back up to $12.57 by everyone's favorite day, June 8th. Then that was a really apocalyptic day for this name because a lot of the market seemed like it topped out there. This one really did, because then it turned right around By July 9th, it was trading $8.50. So it got clipped pretty aggressively from that $12.60 or so level it hit on June 8th. And it kind of vacillated in that range for a while. By end of October, it got up to about $11 again, then sold off again down to $9.70. Then it seemed like November was when they really found their stride. They went from about $9.65 up to almost $13 in late November there. It's a nice run. Then they've kind of been drifting lower ever since, with a few fits and starts along the way, to where we find ourselves today, about $11.59 or so, off about $0.50. Let's see what our Eye of Sauron found out here in PG&E. Looks like we got a bit of a put-palooza going on out here, Mr. Meatball. The print that caught our eye was 11,833 of the April 11 puts, going up for 18 cents. Paper lifting that off, like I said, nearly 12,000 times over, looks like, on the Gemini. But that wasn't it. Total of about 19,000 had traded as of the start of the show. So folks really wanted to get themselves some of these April 11 puts. Also worth noting, there was some put love in May as well, the May 11 put. So the 11 strike was where the action was today, going up for 42 cents, nearly 5,000 times, lifting the offer there as well. So kind of a put palooza across the board here in PG&E. Worth noting, there are earnings, but not in the April cycle. The earnings are April 29th. So the May puts, maybe someone came out and bought all these April puts and said, wait a minute, I'm not getting the earnings. So they bought some May as well. But either way, the April puts not going to contain the earnings, but the May puts do. So interesting stuff, Mr. Meatball. The 11 strike, 60 cents away from where we are right now, roughly. But also, we've broken through that strike multiple times. Got down to a low of 785 this past year. The stock's been all over the place. For a comparatively sleepy utility, this stock chart is anything but sleepy here. So I can maybe see an argument for some of these, but still, it's a pretty lofty. You're paying about 40% vol on the April puts, and about exactly 40% for both. So equal vol levels, which is kind of interesting. What are your thoughts on this put palooza going up here in everyone's favorite utility, PG&E, sir?
Yeah, it's an interesting one. Is this the California one that has all those lawsuits going on and had declared bankruptcy and all kinds of craziness? Yeah,
they're all kinds of craziness.
So this could be related to some settlements, or something coming out of the wildfire stuff. Who knows? This is a weird one. Do we think they were buyers or sellers, or what have we decided? It's a lot of juice. I will say that.
It's a lot of juice. It seems like the lion's share were lifting offers of these bad boys, and the vol did look like it trended up.
So that's probably not a good thing for this company. At the money, put buying is usually a very bad sign. So I think this points towards some potential downside. Maybe a shoe's about to drop with a court case.
Yeah, I'm looking here at the various prints. They went up at 600 lots, 900 lots, a bunch of different sizes throughout the day. It looks like the vol tended to tick up. By noon, they were trading 43.5 vol out there. So, yeah, they went from sub 40 vol north to 40. It looks like all of these were lifting the offers or close to it, too. So that's usually a good sign that they're probably buying these bad boys. So we'll keep an eye on this. This is not your usual sleepy utility, listeners. There's some movement afoot out here. So we'll keep an eye on these, come back and see how our friend fares on the April kind. Maybe we'll keep an eye on the May kind as well, but we'll come back to these. Once again, we clean out some of our to-be-watched back catalog, and we start filling it up right again. C'est la vie. The Eye of Sauron is a demanding master. Let's go on out now. If that's too rich for your blood, listeners, if you're getting a little bit of that, $11 and change, you're like, I don't know what else you got for me. We got you covered. Eye of Sauron has you covered here. We're going to go out to Mankind, because this is going back to the biotech, biopharma realm that always is a good contributor here on our Odd Block segment. Let's see, before we break down what's going on, this one also has you covered from a overall price action perspective, because $11 and change, too rich for your blood. We got you covered. $3.70. How's that sound? That's what we got here for Mankind Corporation. They work on therapeutic products for diabetes and hypertension. So there you go. A year ago, they were trading about $1. They got as low as 91 cents. So they're obviously coming out of their great nadir a year ago. Maybe no one was jazzed about a diabetes drug when everyone was focused on the pandemic. Either way, this stock kind of hung out there for a while, traded about $1 and change, gapped up on our favorite day, right around June 8th, actually a little bit later, June 23rd, hit $2.13. So it almost doubled. Then it kind of sold off again and kind of languished in pretty much this $1.50 to $2 range all the way through till November, when it finally broke $2, started trending north, got up to almost $3 by December. Then it popped by December 17th, hit $4. So it had pretty much doubled in the span of about a month and change over some good news in this name. Then it kind of gave it up again, got down to $3.40 again and vacillated around there, $3.20. Beginning of the year was right around $3.15 or so. So it looks like the bloom was off the rose a little bit. And then bam, February 2nd, it started turning back up, got up to $3.84. By the 3rd, it was trading $5.12. Got as high of $6.25 on February 19th. So it had a nice run up. And then almost just as immediate run right back down by March 4th, it was trading $3.38 again. So it had pretty much been cut almost in half. And then it kind of tried to fight back its way back over $4, hit $4 ever so briefly just about a couple of weeks ago, and then kind of giving up the ghost again down to $3.21. A little bit of a rebound now, up about a dime to $3.70 or so, but still, it's been a interesting and very aggressive last couple of months in particular out here for Mankind. Let's see what our Eye of Sauron found here for this newcomer to the odd block. It was the April 4s, so a little bit out of the money, going up for 24 cents. And here's the market they got when they put up this trade list. And they got a dime at 45 cents. So a pretty crappy market out there. I think we can all agree. But again, it's Mankind. It doesn't really do a lot of paper. So you can't really fault the market makers for not being super tight. There are earnings, but they are in May 5th. So no earnings in this option cycle. The stock was $3.65 when this went up, and it was about a whopping 116 vol. So, Mr. Meatball, given the way these crappy little names trade, I'm going to go out on a limb and say they probably bought these bad boys for 24 cents. That offer was kind of just nonsense at 45. But I'm free to hear the counterpoint if you think they actually turned around and sold these bad boys for 24 cents and 116 vol. What's your takeaway on everyone's favorite biotech, Mankind Corporation, sir?
They're 100% a buy, and they are thinking, hey, maybe this has that retail-y, cheap Robin Hood type of feel to it, doesn't it? Maybe someone reaching for a move here, because there are prints all over the place in this name.
That's why I was thinking, yeah. So I was thinking buy. It has all the hallmarks of your traditional Robin Hood type name, cheap name, call buying, out of money, pretty rich vol. Has this come across your Robin Hood radar at all, sir?
It has not yet, but I could 100% see that happening.
Well, we'll keep an eye on this. You put it in your Robin Hood radar as well, sir. See if the folks in your crazy Robin Hood trader are lighting this bad boy up. So yeah, Mankind. Keep an eye on it. At the very least, maybe they're going to bid up some juicy calls. You can get some verticals for cheap if you are so inclined. As we move on into our final name, let's see. We've got Under Armour. I haven't talked about them in a while here on the show. Ticker symbol UA right now, $17.75 off, about almost 60 cents or a little over 3% on the day. This is another one that had a bit of a tortured run over the course of the past year. A year ago, they were trading $8.41, but they weren't done selling off. They sold off. Again, another one had their nadir actually in early April, which is kind of interesting. Hit low of $6.37 in early April. Then they kind of bounced off. It got up to almost $10 again in late April. Then they sold off again down to about 6 and change back in May. And then they rebounded yet again by, June 8th, everyone's favorite day last year. They were trading 10 and a quarter. And they gave it up again down to 8 and change. They were trading in the $8 range throughout most of June. Into July, they got back up to about $10.33, then sold off again. A lot of fits and starts here for Under Armour. By October, they got to $12.75, so they were starting to rebound a little bit there. Then from there, it's kind of been a nice, slow and steady, gradual rally ever since then, trading almost $15 by December, $15.20 or so. By the new year, trading $15 still, so kind of hovering on that level for a bit. Then it seems like in late January, they popped again because they went from $14.75 all the way up to about $19.21. And then they continued rallying throughout the next couple of weeks up to about $20.31. That was their high so far on the year here. So good run here for Under Armour from about 6 and change all the way to $20. I guess some folks getting their workout gear in again over there at Under Armour. Let's see what our Eye of Sauron found. Looks like a fair number of prints going up here as well all over the place. The first one that caught our eye was a block of 3,161 of the April 17 half. So now in the money calls, going up for 90 cents. A couple things hit our radar. First off, decent vol, nearly 50% vol for Under Armour. And then also the market was fairly tight, 85 cents at 90, which usually is a sign that maybe something else was going on out there. More prints had gone up or were going up. So we had our Eye of Sauron do a little bit more digging. By the way, the stock was $17.77 when that print went up. And we saw a whole bunch more had gone up throughout the day. A block of 3,161 for 90 cents again, same 17 halves. They traded 1,836 times again a few minutes earlier for 75 cents. They traded 1,042 times a little bit later for $1.08. So they traded all over the place. Total of about 13,000 had traded when we kicked off the show here today. So a lot of action here on this April 17 half strike. Worth noting, earnings are May 10th. So yet again, not an earnings play here. This is kind of just a near term, what it seems like, just loving themselves some of this Under Armour April 17 half. Looking at the vol here, yeah, the earlier prints were lower, 46 vol. Then we get up to later prints, 48, 49 vol. Let's see. So yeah, these have all the hallmarks definitely of some folks buying. So Mr. Meatball, we've known, if past his prologue here in the odd block so far for 2020 and 2021, buying premium is a bit of a rough road. Of course, they do have that momentary blip when it works out, and so far none of them have closed at the right time, and they've all ended up holding the bag. What are your thoughts here on someone gobbling up some 50 vol, right around 90 cent to $1 calls here, pretty much at the money calls in Under Armour, sir?
They're looking for a move higher. It's not a great day for Under Armour. The vol is down a lot today, according to my vol, but that doesn't seem to be lining up with what I'm actually seeing here. That could just be bad data. It's an interesting one. The vol is really vol's up about 6 points. These are buys. They're big bet on the underlying on Under Armour's underlying going up. So this is a pretty aggressive bullish bet. I'm real interested to see why they're doing this. The chart on this looks really ugly. So somebody's saying, hey, you know what? The 50-day moving average, which is 1779, right where we're trading, is their line in the sand, and they think it's going to bounce and maybe back above 20, which is where it was on the 16th.
Yeah, we're going to keep an eye on this one, too. I'm with you. I'm not a fan of these kind of at all. This is probably a bridge too far, but we shall see. We'll keep an eye on these. What do you think, listeners? Are you guys trading Under Armour? Are you part of this massive 13,000 lot palooza going up out here? We shall find out as we keep on rolling. It's Monday. Time for some strategery. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, the portion of the show where we break down a little bit of option strategery, some wit and wisdom for you. And Uncle Mike, sometimes when I'm trading my options, I want to have my cake and I want to eat it too, which means I want to swing for the fences. I want to trade and capture that large move in a stock, but I don't want to risk the farm. I don't really want to have a lot of risk to do it. You ever have one of those days, Uncle Mike?
Every day is a day like that for me. I always want to have my cake and eat it too. And, I had a client tell me once that we were doing our annual review. And so this was a few years back. So we had made money for the year, and it's still my client actually. And so he talked about, well, how can we make more money than we did last year? And that's what every client asks all the time. And that's why I love my clients, because I'd ask that too. And so I said, well, of course we can make more money, but the portfolio is going to have to become a little bit more aggressive. And so he said to me something that I'll never forget. And he said, well, I don't mind being more aggressive so long as it makes money. And I think that's kind of how we all feel. If God were to tell me that what the market close would be in the next few days, then I would buy as many out of the money calls and or out of the money puts as I possibly could with my entire life savings, because I knew God told me that, and the market would do what God said. But unfortunately, God doesn't give me market closes for the future, so I can't do that. But with that being said, what do we want to do if, let's say that there's a lot of stocks out there that have potential large moves? So let's say that you want to be a part of it. And I'm not going to get into any specific individual stocks, but let's say that you like a stock and you're thinking, okay, well, I really like this stock and I really don't want to buy it because this thing's either going to go way up or it's going to go way down, one of the two. Well, what I would encourage you to consider is potentially buying an out-of-the-money call spread. So in other words, let's say that you like XYZ stock, and XYZ stock you think is going to go to the moon, but it's a stock that just because of COVID, it had a big run, or maybe it's going to go down, whatever the case may be, but you really want to be a part of it. Well, one thing that I would consider doing is buying an out-of-the-money call spread. And so let's say that XYZ stock's trading at like 180, something like that, and you're really thinking that this stock's really going to hit it big, and you think it's going to go to 280, let's say. Well, if that's the case, maybe look at the 275, 280 call spread, maybe 1 year or 2 years out. And by doing that, what's going to happen is that you're going to get something to where, let's say that you can get maybe a 4, 5 to 1 risk to reward, meaning if you can get that call spread for, say, a $5 wide spread on a call spread, and you can get it for between $1 and $2, then that's something to consider. And by keeping the rest of your money in cash or in something that you deem as safer, then you're not taking on that risk of the crazy movement of the underlying. Now, of course, the disadvantage to that is that you only have 1 year or 2 years to actually take advantage of this movement. And if the stock does not move quite as much as you think it's going to move, then you're going to lose all your money. But if you lose all your money, and all your money isn't a lot, and it really isn't all your money because you kept a lot of your money on the sidelines, that's not exactly a bad thing. You know that what your risk is limited to. So if you were to take maybe a few $100s as opposed to $18,000 to $20,000, and you lost all your money that way, it's a much better pill to swallow instead of the stock going down by 50% and losing 50% of your big money. So in other words, losing 100% of a little money is a lot better than losing 50% of a lot of money. And so that's one thing that I would definitely want to encourage you to really keep in mind as you're looking at some of these high-flying stocks that are out there right now. Now, of course, the other disadvantage is, let's say the stock does get the big move tomorrow, and it goes up 50% tomorrow, and you're in this long-term call spread. You're not going to benefit from it as much as you would on a shorter term option. And the reason is that short call option is working against you at the same time that the long call option is working for you. There's still a lot of time decay that needs to come out of that short call option. So you will have to be patient, and you will have to be frustrated and say, rack and schmeck, and that Uncle Mike, he has me in this call spread, and I got to wait a year before the money actually comes in, and the vol comes out more, and the time decay comes out more, and you're going to have that frustration. So just hear me now and understand that before you get into it. But if you believe that you want that much time, and you want to benefit from that stock moving that much in that much time, I think it's something to consider, because of the fact that no matter what you're going to do, there's going to be an advantage and a disadvantage to every possible trading scenario there is. And hopefully that helps you understand the advantages as well as the disadvantages. And as if life were not able to get any better, I have an article that I'll be posting on my blog and sharing on Twitter within the hour. So keep posted to @MikeTOSAW.
There you go. Keep posted as we keep posted to you folks. Real quick, mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. See what you folks have on the brain. Regular listener here, J3 Dingle, chime in and says, I love the 80s theme song segment because it makes me feel young. Yeah, I think y'all enjoy it. All of our listeners are very young and vigorous and vibrant and also intelligent and quite indeed very handsome and attractive as well. We've learned that from surveys of our audience. You're a very handsome and intelligent bunch out there. All right, let's keep on rolling. Let's see. Yeah, we actually had some interesting developments. Round one is now in the bag. of the much ballyhooed return of Broker Madness over the course of the past week. Had some interesting upsets, some interesting surprises. Takeaways here from the Broker Madness listeners. Not a good time to be, shall we say, one of the quote-unquote freebie, millennial-oriented brokers out there, because they all got whooped in round one of our of our battle. Let's go through the rankings here first. Let's just go battle by battle. TD / Schwab's, a.k.a. the Leviathan of the business, taking it to Tradehawk by Tradier. So they're advancing here to round two. Tastyworks also triumphing over Vanguard out there. Then we get some of the interesting upsets here. Robinhood was going up against Lightspeed. Robinhood obviously not having the best PR of late. Maybe some of that to blame for the bad showing, or maybe the folks don't like him. Either way, Lightspeed's always been the little engine that could in our tournament. I'm sure a lot of people out there have never even heard of Lightspeed, but if you're in the space, the options brokerage arena, you probably have heard of them or some of their products that they've offered and licensed along the way. They've been involved with live vol and a bunch of other things along the way. So they ended up triumphing over Robinhood. Whether that's an anti-Robinhood vote or a pro-Lightspeed, I'll leave it up to you folks to judge. But Lightspeed moving on. Also, another newcomer in the millennial free brokerage category, Gatsby, getting trounced by Merrill Edge. So Merrill Edge moving on to round two. In the other brackets, we had Ally Invest, so the home of Mr. Overby and OPR over there, triumphing over E-Option, moving on to the next round. Then we have the juggernaut of E-Trade / Morgan Stanley going up against Trading Block. E-Trade moving on to the next round there. Then we had Webull, another one of these kind of upstarts, quote-unquote Web 2.0 millennial-oriented free brokers, getting whooped by Fidelity. So kind of the most old school versus one of the more new school names. So all of the quote-unquote, smaller account type free brokers getting shown the door here in week one, which is kind of fascinating. So Fidelity moves on. They will face the winner of the Interactive Brokers and TradeStation battle, which was TradeStation. So interesting matchups coming in here for week two, round two. Our Elite Eight here. Got Fidelity versus TradeStation, Ally versus E-Trade. We've got Merrill Edge versus Lightspeed, and Tasty versus the Titan, that is Schwab / TD Ameritrade. We'll see if the upstarts can win there as well. But fascinating stuff. If you already have voted, well, good for you. We gave you extra points there in the first round, extra fields, I should say, for you guys to add in some extra feedback. So if you want to have some interesting stuff to share, we will probably share on that. If you want to make it anonymous, we could do that too. Just want to share it with us. And some of you folks have opted for that. What you like about your broker, what you don't like about your broker, who you use, all that fun stuff out there. It is now round two. If you want to be registered to win the fabulous prizes, you can fill it out again. You have to put your email in again if you want to get registered to win the fabulous prize. Otherwise, we don't know who's voting and where to send your prize. So make sure if you want to win the fabulous prizes, fill it out there again. You can only vote each round once, but you can vote in each round. So if you voted in round one already, you can come back in and vote again in round two, but you can't vote more than once. So keep it going out there. Fascinating stuff. Mr. Unlimited chiming in the chat saying the rookies lost to the vets. That's what happens in sports. Yeah, you can certainly see that. Of course, this year's NCAA tournament may be the counterpoint to that. Oral Roberts and its ilk just wiping the floor with veterans out there this year. But interesting stuff nonetheless. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until we gather here together on this show on Thursday for episode dose of your biweekly options extravaganza. Mr. Uncle Mike, we'll start with you. What are you keeping an eye on for the rest of this week until we can gather here together on Thursday?
Well, watching to see if we can make a run at the 4,000. That's the first thing that I'm watching. Watching Treasury yields, and I think I'm going to watch dinosaurs. It's been highly recommended to me, and by very reliable TV sources.
You could do worse than watching some of the dinosaurs out there. Mr. Meatball, when you're not catching up on dinosaurs on Disney+, what are you keeping an eye on for the rest of this week, sir?
The Russell 2000 is taking an ugly turn today. The VIX is bid. I want to see what the market is going to do from a volatility perspective. What's the Russell 2000 going to do? And as Mike said, 4,000 for the S&P, yay or nay, and when? That is going to be the question everybody wants answers to.
The question, indeed. Unfortunately, that music means no more time for questions, at least on this show. But if you need more in your ear holes, listeners, don't worry. We'll be back in about exactly an hour to talk all the things lighting up the world of crypto derivatives. We'll be joined by the folks at Kraken. That'll be fun. Haven't had them on the network before. Of course, one of the big players out there in the crypto exchange scene. Interesting to see what's going on their front. So that'll be in exactly an hour. If you're listening after the fact, as I know most of you are, just hit next. It's okay. It'll be there waiting for you after you finish the old OB. Let's go back around the horn. If folks are intrigued, maybe Mr. Meatball, they want to check out some of these small lot trading things you guys are profiling through your Robinhood trader. Where should they go? What should they do?
Yeah, come to optionpit.com. Sign up for our email alerts. We are giving you important information about the VIX, about markets on a daily basis. So if you want to know what's going on, and we did a free all-day educational event last week, and you needed to be on our email list to get invited to that, go to optionpit.com and drop in your email and join us.
There you go, optionpit.com. Get while the getting is good. And Mr. Uncle Mike, if they want to check out all of your latest doses of strategery, where should they go? What should they do?
stcharleswealth.com. Check out my blog. And if you want to also see me and get updates on when I post and things of that nature, check out me or follow me on Twitter at Mike TOSAW.
There you go, at Mike TOSAW, TOSAW is the place to go. You know where to go to learn more about all things fintech investing opportunities in the volatility space. Demandderivatives.com, 2Ds. Check it out. Low minimums. Anyone can play over there. Get a piece of the action in the volatility market. Before that, crowdfunding is done, which I do believe is done in about less than a month. So clock is ticking over there. Demandderivatives.com is the place to go. On behalf of those folks and the Unklest of Mikes and the greasiest of meatballs, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live. Of course, back a little bit later today with the crypto rundown. I think we're going to have to rejigger our lives. We're probably going to end the live stream for a little bit. We'll be back in about exactly an hour to go live for crypto rundown. Tomorrow, of course, interview Tuesday, back with some great guests there. Wednesday, Education Wednesday, double dose of OPR and Options Bootcamp. And then back again on Thursday for another episode of The Option Book.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.